Welcome to the show. Welcome to the 9 a.m. crew. Here we are with the Investing Bros. I'm T. Shroom. We've got Eric Wallen saying the 9 a.m. crew. All right, we're here. We're ready to get into the alpha. GS saying happy birthday GMGM to none other than Joe Nickel, who's celebrating a birthday. Brace for air horn. Smash that like for Joe Nickel and his birthday. He also said, I feel like I'm not the only bro with a birthday today, if I remember from last year. So let us know. You may get a little bit more birthdays in the 3 p.m. stream, too. So make sure you tune in there as well. Let's check out what we've got for today. We've got some interesting macro developments that could be very bullish for Bitcoin coming in next week and the rest of crypto and the stock market as well. We've also got a lot of interesting stories around Polkadot and some banks that look like they're adopting Bitcoin as well. So that's going to be really good. But Bitcoin has been boring. And I'm going to take a look at the charts here to see if we can parse out how it could possibly not be boring and at what point that might occur. But before we get into the charts, do me a favor. If you're watching for the first time, smash that like button. And if you are liking the video, then please do so physically by moving your cursor right on over to the like button and clicking it, or smashing it, whichever you'd like. Well, let's take a look here at the Bitcoin charts. As you can see, we've got a bit of a symmetrical pennant, symmetrical triangle, some call it a pennant, kind of starting to form there. Turn off a little bit of this noise. Goodness gracious, there's a lot going on in this chart, isn't there? Can turn off the Bollinger Bands as well. There you go. Maybe a little bit more clarity. So you've got some historic levels here in white, 64,008. That's one that I really, really like. That's going back to the bull market from yesteryear, from 2021. And it looks as though we've just rejected off of it, right? So we rejected off of it towards the close yesterday, the New York Stock Exchange. And we've just come down, but we found support on this uptrending line of support. It's very steep. It's a very steep line of support that's uptrending, and I've got to say, as we kind of continue generally consolidating within this triangle, this could potentially break out to the upside, could also break to the downside. But we've just come from a pretty prolonged period of price discovery to the downside, and we only got down to 60,000, right? 59,500 to be exact. And that was just as early as April 18th, right? So not long ago, we were down there, saddled up, and looking like we potentially could go lower. But alas, we went ahead and rallied almost 13% to the upside, and now we've retraced and given back about half of that, right? And we're consolidating. So let me know what you guys think. Do you think this is a terribly drawn pennant? I think it actually works. The pennants actually do more often than not break bullish, but I'm not holding my breath, right? I think that right now we don't have a new thesis for buying, right? We have the general thesis for buying Bitcoin, which has a lot to do with, it being better money than the dollar, better money than euros, better than fiat in general, and that is not going away. That buy thesis, it's not going away, right? Here in the Investing Bros, that's why we continue to DCA Bitcoin and other assets, because we want exposure. We want to hedge against this runaway debt-laden government and generally fiat system that just cannot get enough debt. We like to buy assets, and these digital assets seem to be doing very, very well month over month, year over year, especially when we're not in a bear market, right? So overall, the 4-hour charts have been pretty boring. Going back since March 11th of this year, right, we've mostly been in this downtrend, slightly downtrending price channel, right? And so what do we do from there? Well, we can't really know too much about what's going on here. On the 4-hour, we can see the momentum, but this fluctuates so quickly day to day. So what I've been doing is actually going out to the weekly chart to see what we can't pull out. I've been going out to the weekly. This is not the weekly yet. I just went to a different exchange where I know that there's a lot more, there's a lot less clutter for my bros. And out on the weekly chart, we can see right away that the MACD is not looking very bullish. It's looking very bearish as it's curved over, similarly to how it's done in previous bull markets, right? And a lot of that has to do, I think, with the ETFs kind of reaching their peak. We've seen now that there have been a cease, like kind of a slowing down in the inflows into those ETFs. And so, the market's asking, okay, well, where do we go from here, right? And the momentum is slowing because the brakes are being hit, right? Money is not flowing into Bitcoin as aggressively as quickly because the lack of a new buy thesis, in my opinion, right? That the only new buy thesis is that price will go up, right? And that's not that compelling because price needs to go up in order for price to go up. And right now it's not doing that. So you're not getting that FOMO, you're not getting that FOMO thesis, right? So what has to happen? Well, you have to go lower in order to go higher, is kind of what I'm thinking. And out on the weekly charts, you can also see that we've lost momentum here from the Lux-Algo oscillator matrix as it's come down and put in a lower low here. It had a higher high on the hyperwave, but we've gotten 4 reversal deltas dating back to October 30th, right? And so we've just been in a very aggressive bull rally, very elevated, getting all the way up to 96, right? And the money flow is starting to round off and come back down. So is this discouraging? Should you sell your Bitcoin and try to time an entry back in lower levels? I don't think so. Because this is Bitcoin. And at any time, there could be a new buy thesis that rotates into the market, right? And who knows what it could be. I'm not going to report on it today, but I saw this morning that the Swiss National Bank just gave a list of hesitations of why it's not bringing Bitcoin onto its balance sheet, which means that somebody has been trying to sell the Swiss National Bank Bitcoin, probably Fidelity, probably BlackRock, right? Maybe on the Hong Kong side, it's these ETFs, the Hong Kong ETF issuers, trying to sell the Swiss bank some Bitcoin ETFs. They're saying no for now, right? But how much longer until the Swiss National Bank says yes? And then that's a huge bullish catalyst. Banks don't want to be left behind. So overall, I think what we're seeing is just generally a hangover from the huge party that was the ETF approval from the SEC, right? That unlocked a ton of new capital that rotated in and hasn't sold, hasn't even begun to sell, right? And rotate out and take its profit. That is all money that we can say has a different buying behavior than what has propelled Bitcoin higher back here, right? This was a lot of whales retail, right? A lot of whale retail and a decent amount of institution, once you got pumping here. But here, this is almost all, 401k holders and institutions and, high net worth individuals who are starting to see Bitcoin a little differently. But who is going to be, so now that we're hungover, who's going to come in, pour cold water, hook everybody to an IV and say, okay, now let's get some sleep, let's rest up, let's cool off, come back, test some levels. The Bollinger Band down here is at $54,500 per Bitcoin, just pointing it out, right? And we haven't tested that midline of the Bollinger Band on the weekly chart since way back here. We were well short of it. Look at all that daylight there back in February. But we haven't been at the midline since October 16th. Now, T. Shroom, are you saying that we have to go down to $55 per Bitcoin? No, right? But that's what the gravity of the market is starting to do. And that's why we're seeing, if we go back out to the 4 hour, it's why I think we're seeing lower highs, and we've also seen a lower low here. Lower low, higher low, right? Is because the gravity, and I'm not saying that it's all the technical, all technical analysis rests on the 20-day moving average. That is the midline of the Bollinger Band. I do tend to overweight the Bollinger Band as an indicator, but I do like looking at it, right? And it does look like it's coming back to test this level as the midline is coming back to meet it, shake its hand. And to be honest with you, if you play it out in time, the mid-level is probably more like around 58 by the time these two the price of Bitcoin and the midline touch, right? But the whole point is that a very simple traditional indicator is kind of showing that the moving average is still very, very aggressively moving to the upside. Why? Because of this insane rally that the average of the price of which is still trying to catch up to price, which just took off and never looked back. Well, now it's starting to look back. It's catching its breath, right? It's the hangover after the party. And hangovers have phases. If you've ever had a hangover, you know. Sometimes you start to feel better, and then a wave of the hangover comes back. Right? I think that's what we're seeing is wave after wave of some, especially the Bitcoin halving. I think gave a lot of people kind of a bullish, optimistic vibe because it was this kind of historic moment. But it ended up kind of just being a nerd nothing burger, a nothing fest. Right? At least for now. There was an event that the actual halving itself and the halving of the supply is not a nothing burger. But that is yet to play out in terms of the supply shock. Now, that could be the next buy thesis. But you do have to ask the question, how many Fidelity and BlackRock salespeople were sitting there selling all these 401k holders on that exact metric, that exact event, the Bitcoin halving? And so then it is baked in, right? So really zooming out today in the TA, just because there's not a ton going on. I showed you that pennant down on the 4-hour. Again, I don't know how many other technical analysts are looking at that pennant very seriously, but I decided we really need to zoom out. And you know what? We haven't zoomed out enough. I'm going out to the monthly chart to take a look at just how freaking bullish this has been. Right? If we look back here at the previous bull market, this is where I get that 64,800 level. For those of you who sometimes you don't know that, comes from this level right here. Okay, but look how much time we spent above the Bollinger Band. Okay, that was 1, 2, 3, 4. Well, 1, 2, 3, 4, 5, 6, 7 monthly candlesticks that were partially or entirely outside of that. So far, we are at 1, 2, 3, 4, 5. Right. So if history is any indication, we have at least 2 more. And I think that's just the beginning. I think there's a lot of reason to believe that we're going to see a lot more candlesticks outside of the top line of the Bollinger Band. But what's something else that we notice here, and I'm going to go back over to this other chart, is that the current month, the April monthly candle, is now printing below that 64,800 level, right? That's really not what I want to see. I really want to see Bitcoin's price action show the market, show Forex traders, show gold traders, show stock market traders that, look, you need to get into Bitcoin now on this pullback because we are going higher, right? But it's the first part of that sentence is intact. You need to get it while it's low, right? But the second part of that thesis is not intact because we're going higher. Right now, if I'm a trader outside of the crypto markets, I may be looking at this and thinking, well, I don't know if we're going higher. I mean, we're not able to find support on these historic levels out on the monthly chart, right? So anyway, that's the zoom out. I think we're in a hangover after this crazy party that we've just been in, and we just need some R&R. Need a little rest, need a little relaxation. Maybe you're not appreciating the hangover analogy, and I apologize, I suppose, although I think it's apt. I think it's an apt analogy, an apt comparison. Maybe I wanted to live stream today so I could say the word apt too many times. All right, let's see what we got going on here in the chat. Lou said, why is the market moving on the news of the Hong Kong ETF, which comes online next week? Why is the market moving? I think he meant, why is the market not moving? Well, the first thing that comes to mind is it's baked in, right? The market has known about the Hong Kong ETFs going live for a while. I think we might have a green pop on the day, potentially, but it's a classic sell the news, right? What really is going to be interesting is how much inflows there are in the first day, first 3 days, first 30 days, right? Because if that goes well, then that could be a new buy thesis for the Asian markets. I don't know how much more American markets are going to look over to the Asian markets and say, ooh, we got to front run these Asians. I just don't see that being the new buy thesis. It might be. I could be misreading that. But you have to remember how much smaller the Asian markets, even mainland China, is compared to America, the American markets. Mainland China is actually pretty big, but the Hong Kong markets are very small. It's like, well, not very small, but they're about the size of like Germany, like half of Europe, right? So it's not America, right? America is far and away the biggest markets, and we're already there. That's already unlocked. Those ETFs are already there. So it is good. It is generally bullish, right? That the Hong Kong ETFs have been approved and are going into live trading, but a lot of that's baked in, right? And the market, it's, if you go back to the hangover metaphor, right? The market likes to see that, right? But it's kind of waking up, feeling the energy of, thinking, am I over the hangover? And it's like, no, I'm not. I'm going to go back to sleep. That's kind of the way that I'm thinking about it. Brutal said, T-Shroom, can you check out silver? Looking bullish. Yeah, I might as well. I've got an easy access to check it out here, so I will. But my guess is that it's probably a good buy. Yeah, so it's what it put in is this an all-time high here? Close, not an all-time high. Okay, cool. Well, this looks like a great buy because it's lower than what it could be. And I think that what does silver kind of catch up with gold? So gold historically has done really well, and then silver catches up maybe. I don't know. I don't know about those cycles. If there's like a gold cycle and then an altcoin, an alt metal cycle that catches up, I'm not sure. But it is what I will see. Oh, yeah. So that's my silver analysis. I don't look at silver very much. This is the silver mini futures on the COMEX. Looks like it's finding some support on the midline of the Bollinger Band there. I like to see that. I'm not going to rotate into silver though, guys. And here's why. Is because I spend a lot of time studying the crypto thesis, studying the crypto markets and trading psychology. That's why you guys tune in, because, I have an above average amount of time that I can spend on studying these markets. Every minute that I spend trying to study silver, I'm not studying crypto. Does that make sense? So to the extent that I do look at the gold charts every now and then, it's really only to inform my crypto positions. It's not because I'm considering opening a position in gold. It's not volatile enough for me, right? And for my portfolio and for my approach to trading and investing. Not saying it's a bad asset at all. I think gold is an excellent asset. Bitcoin's better, but it's just not something that I want to rotate into. It's not something I want to allocate into. And if I did, I would probably buy PAX-G. Do a little bit of research on that for yourself. All right, we're a little over the halfway point here. Kyle Field said, probably mirrors Litecoin. Interesting. Yeah. Brutal said, thank you. Might be grabbing a kilo today. A kilo of silver? Oh, yeah, that's right. So silver's a lot cheaper than gold. So you might be buying a lot. I've always wanted to have like a gold hammer for some reason. Like a hammer made out of gold. Not that I would ever use it, but I just feel like that'd be kind of cool to have like in an office or something. I don't know. How stupid is that? Let me know. All right. I see people shouting out altcoins for me to do a little TA on. You can shout them out, but I'm not going to be doing. That's our 3 p.m. show. That's in our Q&A section for the 3 p.m. show. Tune in. Let us know what you're looking at, and we'll do some TA on it. Cal Field says, is there an indicator that could show where inflows come from? LTC trading so differently. I'm curious where the money is coming from. Well, I don't know about that. That's definitely going to be on the on-chain side, and I think you can see like the types of people, the types of wallets that are buying Litecoin based on demographics such as how long they've held it, how long they've held other Litecoin, like when was the last time they bought Litecoin, and also if the wallets are in profit. And you can look at I don't know if they fetch all that data for Litecoin. I'm sure you could because it's all on chain. I just don't know if it's very popular to do that. What I will say is Litecoin is kind of the altcoin for a lot of Bitcoin maxis, right? They like Bitcoin Cash, they like Litecoin, and by like I mean they tolerate, right? When they look at Solana and Ethereum, they're like, oh, scared and freak out, and it's like, look, I have more in common with Bitcoin maxis than I do with a lot of other types of people, but I'm an altcoin guy too, right? I like to make a lot of money as well as a lot of money. All right, Gia S jumping in. Let's see what Kyle Fields also said. Nothing a good cheeseburger can't fix. Oh, we go. There we go. Someone can relate to the hangover. And I'm not hungover right now, by the way, at all. I did have a seltzer last night though. It's a nice little seltzer. I won't shout out the brand just in case there's a seltzer sponsor out there that wants to give your boy a DM. Robert Cho said, "So had we not had the ETF, what would the current price be?" That might be the question. Yeah, that's a great question. Let's zoom out. I'm on the silver charts. We're going to figure this out. No, we'll go over to the Bitcoin chart and see, because I like this question. This is a fun little question where there's no right answer, so I can't be wrong. Let's see. All right, so you've got the bull market here, the previous bull market. We'll call the bottom here. We'll call the bottom this candlestick here where their consolidation kind of stopped, and we had a nice bounce off the midline of the Bollinger Band, right? And that was a 514% move to the upside. 550 if you count the next peak, but we won't. So from where we are now, I'll go ahead and go to the bottom, although you could probably say that this was the equivalent of where let's just do this one. So we're at 170, right? So that's pretty good. And if we go all the way to the bottom, we're at 370. Goodness gracious. So we've really moved. So I think overall here, what I would say, so if we didn't have the ETF, I'm just kind of spitballing here. The ETF happened, well, let's just look. January 10th is when the of 2024. Let me get in 2024. I got to zoom in a little more. January. This is a good question. I like thinking about this kind of stuff. So, I mean, you do have to come back here though, because all this is baking in that price. It's repricing Bitcoin for the announcement here on January 10th. People placing bets because it wasn't a certainty that we were going to get it, right? So I'd say all through here, let's give Bitcoin a little bit more of the benefit of the doubt that it would have had some gain, but probably about 92%. So what is 170? I think it was that we were up since the lows. 370, way off. So 370 minus 92. So whatever that is probably how much we would be up, right? And that's some extremely back in the napkin math right there. But I don't think it'd be too far off. In my opinion, we would definitely be lower than we are now without those ETFs, right? And we would probably all have a similar mentality. We'd be waiting for that snap higher. We would not have touched all-time highs yet, right? We would be like, man, I can't wait till we're up at 63. I can't wait till we're up at 63. That's going to be crazy. I'm going to be so rich, right? Well, that's where we are today, 63 and change. And last week we were at 75, right? So, all right, let's go ahead and jump into some news here. Great question, though. I really like that one, Robert Chu. If you're tuning in for the first time, first of all, welcome. If you're tuning in for the first time to crypto at all, buy Bitcoin. Don't buy any other altcoins. Wait, educate yourself on what altcoins even are. But don't wait to buy Bitcoin. It's not financial advice. It's just wisdom, right? Buy Bitcoin because it's better money. Don't buy more than you can afford to lose. And if you're in retirement, be very, very careful. Talk to some people who've studied risk management quite a bit, but get some Bitcoin, right? Get some Bitcoin and do not attempt to buy altcoins until you've been in that Bitcoin position for about at least 3 months, if not longer. Right? Why do I say that? Because there's a lot of scams in crypto, if you haven't noticed, right? And just because you tell somebody to go buy Ethereum, which would probably be the second, not probably, is the second least risky cryptocurrency out there, right? They might go somewhere and click on, Ethereum.gyylom, right? And think that that's where you buy Ethereum, right? So you have to be careful in doing your own research post buying Bitcoin is very important. Yeah, but just fire up a Coinbase account, maybe Robinhood, maybe buy it, somewhere else and put it on a cold wallet, put it on an Arculus wallet, your Bitcoin, and you'll be off zero. You'll be ready for the coming crisis, financial crises, or whatever is going to happen, or You'll just be betting and buying the best asset in the world, in my opinion. All right. We've got a fun one here. We'll start the news with the fun one, or should we do it at the end? Let's do the fun one here at the end. All right, let's get into, not that the rest aren't fun, but Bitcoin and Ethereum face crucial tests as 9.26 billion in options expire. So that will be happening very, very soon. So we'll be watching that, bracing for the volatility. Bracing for that volatility may actually shake us out of an otherwise pretty boring Bitcoin market moving sideways. So we'll see. Got those expiries coming very, very soon. This week in Polkadot, Web3 Foundation backs decentralized storage. The Web3 Foundation threw its weight behind decentralized storage, backing Moonsong Labs Storage Hub as part of its decentralized futures program. The project aims to provide a full Polkadot native storage solution tailored to a wide variety of Web3 use cases, all built atop Polkadot parachain infrastructure. And then for the bonus round, Polkadot founder Gavin Wood has launched a new podcast, A Glass with Gav. That is classy. To discuss the world of Polkadot and Web3. Cool. Oh, that could be interesting. It looks like, wait, is this the real YouTube account? They only have 23 subscribers? That'll probably change pretty quickly. But 3 days ago, they posted their first YouTube video. A Glass with Gav. This is so small. They really did just start this. That is really small. Good for them, though. Good for Polkadot. All right, let's see what else we got here. A lot of ads here, folks. Sorry for... see if I can kill some of these guys. Bitcoin. BNY Mellon reports exposure to Bitcoin ETFs. This is true. Very, very exciting stuff. I've got the 13F form pulled up here, and you can see indeed Grayscale Bitcoin Trust, for some reason, is the one that they rotated into. Man, this is kind of hard to read, but they got a lot of it, too. 400,000 shares, is that right? And then 166 shares? That doesn't make a ton of sense, but they also bought, I don't know why they bought the Grayscale one, that's the highest fees, but they also bought the iBit one, or was it Fidelity? Goodness gracious. Let's see. All right, well, I know it said it somewhere. Yeah, BlackRock and Grayscale. There we go. Bitcoin ETFs from BlackRock and Grayscale. Very good. Okay, so who cares, right? Why does this matter? Well, because this is a very big bank, right? And they're leading the way again. I mean, they're definitely not the first, far from the first, but they're kind of showing other custodian banks, hey, look, we're doing it. We're the oldest bank in America that does custody. We're also one of the biggest, and we're putting Bitcoin ETFs on our balance sheet. And Crux of Crypto is jumping in saying, good morning. There you go. ADAA said, then you can be like me and be loaning NFTs and farming Cardano native tokens for profit. Right. So Ada Ace is someone who bought Bitcoin long ago, right? So he is now able to go into the world of altcoins and get all kinds of crazy. And to be honest with you, Ada Ace is one of the most crypto, experienced, I suppose you could say, at least in Cardano, right? He's doing all kinds of loaning and farming, and it's all things that I've done very momentarily, but he's done it ongoing, and he's made some good money doing it, right? Very cool. All right, here's the bread and butter story of how the U.S. government might be ready to go ahead and hand over a big bullish narrative to not just Bitcoin, but risk assets in general. The key to reviving Bitcoin's bull run is the U.S. Treasury refunding announcement. There she is, Janet Yellen, contributing to that, was it $1 million legal pad that got sold 2 days ago? If you know, you know. Real ones know, of course. The debt issuance plan impacts markets through the yield curve. Higher bond issuance or supply pushes down bond prices and lifts yields. The so-called risk-free rate disincentivizes risk-taking in financial markets. Reducing issuance has the opposite effect. T-Shroom, what does that even mean? What does that even mean? Well, to be honest with you, it's a little bit like the Bitcoin halving. No, it actually is. So take a look here. During the pandemic, they had been ramping up, selling a lot of bonds, increasing the supply of bonds, issuing bonds, right? And then there's a huge spike, and then there was a movement down, and then there's been a new spike for some reason. I'm not sure. Probably has to do with some conflicts and some spending by the current administration. But anyway, they printed a bunch more supply of bonds and circulated into the economy. Well, what does that do? That decreases the scarcity of the bonds, which are still 100% subject to supply and demand, right? And that then decreases that new issuance decreases the value and increases, now stay with me because this is starting to get complicated, increases the yield, right? So all throughout here, it makes sense that the yield, this is a chart of the yield of the 10-year treasury, right? This every bit that this goes up, the value of the bonds, the competitiveness on the market goes down, right? And as the yields go up. But you can still buy the bonds and get the yield, right? So if you get, $100,000 worth of U.S. bonds, you're still going to make, a competitive fixed rate of whatever you buy it at, 4.6%, right? That's pretty decent. You get in there, a lot of people are doing it or did it, whatever it is. And if you buy the shorter dated ones, you can get even more, 5.3. Okay. Well, this headline is saying that they're going to be stopping that. Goodness gracious, there's so much craziness going on here. They're going to be pausing their refunding announcement. Not the announcement, but they're going to be pausing the refunding. This has not yet been said. It's kind of like the Fed rate decision, where if this happens, it will be bullish. If it doesn't happen, then, it'll be bearish and we'll probably see more sideways to down movement. Or a different way to say it is the Bitcoin market will not get a new bullish thesis to trade on. So, okay, so let me make sure I'm rounding out this analogy. So Bitcoin, when it halves, the new issuance of Bitcoin, right, gets cut in half. So if one day the Bitcoin miners are able to get 2 Bitcoin per day, after the halving, now they can only get 1. Very oversimplified version of the Bitcoin mining. With these bond issuances, the government is constantly issuing new bonds on a predictable schedule, right? Sometimes it's more, sometimes it's less. But what the markets are predicting is that the Treasury, in their next announcement, for their quarterly announcement, is that they're going to signal to the market they're actually going to be very drastically reducing the issuance of bonds. And that's good. Why is that good? Because that increases the value of bonds and decreases the yield of bonds. Hopefully you're staying with me. This is actually real, guys. I know it's complicated, but it's real. So when the yield comes down here, now grandma and grandpa and conservative businesses and banks are less incentivized to buy bonds because the yields suck more and more as it goes down. And especially with how stupid the government is and how much people don't want to buy bonds in general, the faith in the U.S. government is waning and waning. That has a lot to do with people wanting to rotate into bonds. If the yield's not even there, and we see, maybe even a sub-4 rate in the 10-year, then what does that do? Grandma and grandpa no longer want to buy bonds. They want to go buy Microsoft. They want to go buy Gillette, whatever it is, which would be Procter & Gamble. They want to go buy Bitcoin. They want to go buy something that's going to beat inflation. Bonds are really easy to beat inflation. You just buy it. It's a fixed rate. You don't care about it. It's backed by the U.S. government. Bob's your uncle, right? And it's a lot easier than just buying Microsoft and seeing your money go up and down and up and down. And you do get dividends with Microsoft and other dividend issuing stocks, but you have that volatility. Whereas with bonds, you don't have as much volatility and it's fixed assets. Okay, but the main incentive, at least in our era, is the higher interest rates, right? So when those higher interest rates go away, hopefully the theory is that money will rotate, wealth will rotate out of bonds and into risk assets, Bitcoin, Microsoft, Tesla, Colgate, whatever it's going to be, right? So that's bullish. That's really bullish. That's on the horizon. Let me see if I can find the date of when this is going to be going live. May 1st. U.S. Treasury refinancing announcement detailed the 3-month borrowing needs and the balance to be held in the Treasury General is due May 1st. So that'll be coming out May 1st, which is also the same day as the Fed decision. So that is going to be a bumpy ride for sure for the market. Expect more volatility here, not necessarily to the upside in risk assets, but the overall thesis for Bitcoin is still very much intact, still very bullish. We are excited. Now, T-Shum, what about that fun story? Let's get to it. This is from Crypto Rover. He said, it's a full moon, bullish for Bitcoin. We talked about a lack of a bullish thesis. Boom. Here's your bullish thesis right here. Baby, it's the moon.
Bruh.
We've got, but really though, I mean, it does look bullish, and I appreciate Crypto Rover bringing this out. Every time we've had a full moon, I can't believe I'm saying this. Every time we've had a full moon, we go up. We go to the upside. Full moon, upside. Full moon, upside. Full moon, upside. Full moon, upside. Full moon. What are we going to see? I had to sneeze on that one. Had to sneeze it. Fade and Tradfi said, don't fade the full moon, baby. Guys, I am so bullish on Bitcoin. I am not selling my Bitcoin. Yes, things are boring, and there's a general kind of sluggishness to the market right now, but you just keep DCAing. You keep doing research on altcoins that are undervalued, that are underbought, and you just keep on chugging, baby. Some coins that I'm going to continue to buy, probably more AVAX, definitely more Chainlink. I even think Ethereum is pretty undervalued at this point. Yeah, I'm loving it. On the stock side, MicroStrategy is looking good. CleanSpark still looking good. Those are two Bitcoin exposed companies. And I got to tell you guys, Tesla is really calling my name. I've been watching too many Invest Answers analysis of Tesla, and I'm getting pretty bullish on it. Of course, it won't do percentage-wise what Bitcoin and other cryptos are going to do this year, but it does look like it's in a pretty good buy spot. That's Tesla. But I'm overall very bullish, guys. I'm very bullish, and I'm excited. 3 p.m. Eastern Standard Time. We're going to be going live again. That's me and Tim. We're going to be having some fun. Folks, this episode was brought to you by who we trust, which is iTrust Capital. Thank you so much for tuning in, and we'll see you at 3. If you're human, stay hydrated. If you're trading, keep those stop losses tight. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shrooms news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.